The market might as well face it. It's addicted to QE. Yes, that was a Robert Palmer reference for those of you old enough to remember that video with the girls in the black dresses and all that. Anyhow, Fed Chairman Ben Bernanke juicing the markets yet again. Monday, a pledge to keep rates low. Still, we knew this was coming. That's not a big surprise. But I think with the economy showing some signs of life, investors are encouraged that they might have the best of both worlds, an economy that doesn't stink and a Fed that isn't willing to try and cripple the recovery by raising rates perhaps too soon. So here we are, and the market is partying like it's 2007. Stocks near their all-time highs yet again. I mean, we still have a little bit of way to go, but the Dow only about 6.5% from its October 2007 peak. The S&P 500 now firmly above 1,400 is getting closer to its all-time high of about 1,565. It's less than 10% from that. So at this rate, with the rally going at the pace it's been going so far this year, it's not unreasonable to think that we could take out all-time highs for the Dow and S&P 500. Of course, the NASDAQ still remains way below its all-time peak of above 5,100 intraday back in March 2000. Will the Fed keep the rally going? It's hard to bet against them, but keep in mind what I said. 2007 were those all-time highs. We all know what happened next. 2008 was a terrible year for the markets. The economy took a sudden turn for the worse with Bear Stearns, Lehman Brothers, Fannie, Freddie, Washington Mutual, et cetera, et cetera, et cetera. Not suggesting that that's going to happen again next year, but anyone that's buying stocks now does have to realize that after the election, we face a very potentially problematic time for the economy because we need to figure out the debt ceiling again. We need another agreement there. And Congress really needs to get its act together and try and come up with a long-term solution for the U.S. deficit problem. Not saying that we're going to be the next Greece or even Italy or Spain for that matter, but everyone that's just giddy buying stocks right now has to keep in mind that there are still many, many risks ahead. So this might be getting close to a top for the short term.